Back with this special trading session. We've opened quite okay. I mean, it's not a rara move or a big bang follow-up to the fabulous Friday that we have, but not bad at all. I mean, we're still holding around the 22,486 level when it comes to the Nifty futures and the spot Nifty as well, just scaling around that mark. But having said that, I mean, we've always talk about stocks which are already at life highs. Where is it that you actually see some headroom come by? And our research team had culled out a list stocks that are still distant or miles away from their all-time peaks. And quite a few interesting names coming in there. While Z, I will exclude that name. There's lots going on with that. So it's, quite understandable that the stock is still 75% from its all-time peak. This is the BSE list that we've culled out. But look at Yes Bank, for instance. That's still 94% away from its all-time high. There's UPL, which is still down 45%. SBI Cards, it's down about 40% still. There's Page Industries, still a 34% gap from its all-time high. And there's also Avenue Supermarts in there, which is still a good 34% from its all-time peak. Dipan, anything from these list of laggards, if I can call them, that interests you? I mean, be it a Yes Bank, Jubilant Foods, UPL, Vedanta, Page, Avenue Supermarts.
I think it's a very interesting exercise which you did, and you can broadly categorize them into three categories. The ones which have had some issue with them, like Yes Bank or Z. There are certain controversies, which is why the stock is trading at such a huge discount from its peak, the recent high, the last time it created a high. The second are companies which were, when they were trading at those highs, were trading at very, very rich multiples. And then we saw their performance kind of stagnate or not up meet street expectations. And you are seeing the result in front of you. They are down 30-40% or so. The likes of Page Industries and Avenue Supermarket. And then there are the companies which have just not performed, like say Tech Mahindra comes to mind. But apart from that, I think the others could be an opportunity, especially the banking companies over there, which we saw, could be an opportunity. Even an SBI card also, a business which has performed below its potential and consistently, not lived up to the street's expectations. And always there are some surprises here or there or so. So it's a lesson in the sense that, if there's a controversy in a stock, then, 6 months, 12 months down the line, you're not going to get great returns. Secondly, you buy a rich stock with a very rich price to earnings multiple. And if it starts to underperform in terms of its financials, then you're going to see underperformance of the stock price as well. And then I think third are random companies which are not covered in these two baskets.
Now, the other twist in this list, Dipan, is also names which are already either at their life highs or nearabouts. And hear me out on this one. ICICI Bank, just 0.3% from its all-time peak. I think it's already hit that and cooled off. This is as of yesterday's closing data that I'm actually marking out. There's Tata Motors, there's M&M, and there's Maruti. Where do you think the stock is priced to perfection when it comes to the auto segment? And I'll call out the rest of the names in just a bit.
I think that with these kind of numbers which we saw for the monthly sales, I think that there may be still more momentum rally in auto stocks. Tata Motors, I'd just be a bit cautious because end of the day, it's not a local play, it's a global play. And, if there are going to be, global headwinds, slight demand compression over there, then certainly Tata Motors JLR subsidiary may not be able to report the same kind of stellar numbers that it has done in the past 2-3 quarters or so. Also, valuations of Tata Motors compared to other global auto companies is on the higher side. So from that point of view, I feel it seems to be fully priced. And I usually prefer auto companies which are focused on the domestic market. So likes of say Maruti, M&M, I think, in my opinion, would give a higher return on a comparative basis over the next 2-3 months, even a longer period like 2-3 years.
Well, stocks which are already floating around their all-time highs also include the likes of Reliance. There's HAL as well over there. Surprise, surprise, there's Ambuja Cement and there's Grasim also. And then, of course, there's Siemens as well. After the blowout set of numbers that it had, that also gapped up quite a fair bit. And that stock is pretty much skirting around its all-time peak. I guess comfortable, Dipan, when it comes to Reliance, a HAL or a Grasim or Ambuja?
I mean, comfortable means that as I've been saying consistently, that valuations are rich. I haven't seen Reliance price to earnings multiple at these levels, ever. I would say in my journey in the stock market, always was like a commodity stock trading at low price to earnings multiples, and then they got into some solid businesses, and now there's less earnings volatility, and a lot of value is captured from secular growth businesses. So we are seeing a re-rating of the price to earnings multiple. But across the board, I think markets are priced to perfection. One should keep that in mind. They are trading at rich PE multiples, and even if there's a minor miss in the earnings, or for some reason the money flows were to get choked, then you could have a serious correction in the stock market. So we need to caution investors that when they are buying stocks at these levels, they are buying at them at very rich price to earnings multiples. And it may still stocks may still go up because of the kind of liquidity flows coming into it. But when you look back at this moment 2 3 years down the line, then it may buying stocks at these elevated levels may depress your returns over the medium term also.
All right, interesting set of stocks there. Thanks very much, Dipan, for joining in on a Saturday at that and sharing with us your market opinion.